Good morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Tuesday morning pre-market webcast. Okay, so we saw a little bit of bearish follow through yesterday. We've got the middle Bollinger Band sitting just underneath here at 2047.75. We're trading 20.55 quarter. We traded as high as 59 into the Europe Open, and about 4 a.m. Eastern time, it got rejected fairly decently for about 7 handles. We had been making fairly steady higher lows since the 48.25s, we had retested pretty late in the day. After the cash close, we had tested as low as 49.5, and they had been kind of trying to stair step up from there. But once Europe opened, 59 traded once, and then it turned into kind of a double top, at least on the 5-minute chart, and we sold off fairly heavily. Let me show you what I'm looking at here. 59, 59, steady sell-off. They're trying to build it back up now, but the takeaway is that there is some underlying weakness in the market, at least on a very short-term basis. We did as high as 20.75 quarter. We traded as low as 48. So we're getting to that situation now where we've pulled back about 25 handles. The bears are obviously going to want more. The majority of them are short from much lower, but you've got to temper your expectations with respect to where we're going. Here's the middle band. It's not far away. It's at 47. We've gone from 1813 to 2075 quarter. The Bollinger Bands are getting fairly tight. Now, if you look at the Russell, that's broken below its middle band. It's engaged its lower band, and it's thinking about going on a lower band ride, but we'll have to see. If the Russell begins to trade lower along its lower Bollinger Band, the chances of the mini holding the middle band aren't very good at all. Conversely, if the Russell bounces off of this touch of the lower band, although it would be a little bit noisy, I would fully expect to see the mini bounce off of its middle band. And I mean, really, why wouldn't it? I mean, we're in an uptrend. Yes, we've come a long way. Yes, we are still extended on a lot of metrics, but it's December. We have pulled back. At that point, we'll have been just basically a 30 handle pullback. So a little bit more than, right in that 1.5% area from the highs. And the dip buyers are going to come in. The bears will have to take the dip buyers out. The dip buyers will come if we get to middle band. They are going to make a stand. The only issue is, are the bears strong enough? And traditionally, at least for the last couple of years, very rarely have the bears been strong enough. So we're asking a lot of the bears. The bands are not tight enough, at least at this point, for the bears to do their usual setup. The only setup the bears have ever really been able to capitalize on in this market are when the bands become extremely tight. Happened here. We spilled lower. Happened here. And we spilled lower. Happened very early in the year, and we spilled lower. That's kind of been the theme for the bears for 2014. If you want to look for themes. I mean, they've been able to do the whole volatility expansion game, but as far as being able to break a level that's critical, they really haven't done it once. So keep that in mind as we hover around the middle band. If we chop around today, the middle band is going to continue to catch up to price, and this is going to turn into a middle band 20 simple moving average test as a function of time, more than it is going to be a function of price. So something to look out for. All right. Everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trading well, everybody.